Hello students, welcome to the lecture on issue of debentures, and after this lecture we will be able to learn the following objectives. Describe debentures and types of debentures, explain issue of debentures, describe redemption of debentures, describe discounts on issue of debentures and loss on issue of debentures. Let us first understand what a debenture is. A debenture is a unit of loan amount. When a company intends to raise the loan amount from the public, it issues debentures. A person holding debenture or debentures is called a debenture holder. A debenture is a document issued under the seal of the company. It is an acknowledgement of the loan received by the company equal to the nominal value of the debenture. It bears the date of redemption and rate and mode of payment of interest. A debenture holder is the creditor of the company. In other words, a debenture is a document acknowledging a debt against company which is issued by the company under common seal of the company and contracting to pay principal along with interest up to a specified time.
A debenture is a document that either creates a debt or acknowledges it, and it is a debt without collateral. In corporate finance, the term is used for a medium to long-term debt instrument used by large companies to borrow money. In some countries the term is used interchangeably with bond, loan stock or note. A debenture is thus like a certificate of loan or a loan bond evidencing the fact that the company is liable to pay a specified amount with interest, and although the money raised by the debentures becomes a part of the company's capital structure, it does not become share capital. Senior debentures get paid before subordinate debentures, and there are varying rates of risk and payoff for these categories. Debentures are generally freely transferable by the debenture holder. Debenture holders have no rights to vote in the company's general meetings of shareholders, but they may have separate meetings or votes, for example on changes to the rights attached to the debentures. The interest paid to them is a charge against profit in the company's financial statements.
There are several types of debentures. They are registered debentures. These are those debentures which are registered in the register of the company. The names, addresses and particulars of holdings of debenture holders are entered in a register kept by the company. Such debentures are treated as non-negotiable instruments, and interest on such debentures are payable only to the registered holders of debentures. Registered debentures are also called as debentures payable to registered holders. Bearer debentures. These are those debentures which are not registered in the register of the company. Bearer debentures are like a bearer check. They are payable to the bearer and are deemed to be negotiable instruments. They are transferable by mere delivery. No formality of executing a transfer deed is necessary. When bearer documents are transferred, stamp duty need not be paid. A person transferring a bearer debenture need not give any notice to the company to this effect. The transferee who acquires such a debenture in due course, bona fide and for available consideration gets good title, notwithstanding any defect in the title of the transfer, or interest coupons are attached to each debenture and are payable to bearer. Secured debentures. These are those debentures which are secured against the assets of the company, which means if the company is closing down its business, the assets will be sold and the debenture holders will be paid their money. Unsecured debentures. These are those debentures which are not secured against the assets of the company, which means when the company is closing down its business, the assets will not be sold to pay off the debenture holders. These debentures do not create any charge on the assets of the company. Convertible debentures. These are those debentures which can be converted into equity shares. These debentures have an option to convert them into equity or preference shares at the stated rate of exchange after a certain period. If the holders exercise the right of conversion, they cease to be the lender to the company and become the members. Non-convertible debentures. These are those debentures which cannot be converted either into equity shares or preference shares. They may be secured or unsecured. Non-convertible debentures are normally redeemed on maturity period, which may be 10 or 20 years. By issuing debentures means issue of a certificate by the company under its seal, which is an acknowledgement of debt taken by the company. The procedure of issue of debentures by a company is similar to that of the issue of shares. A prospectus is issued, applications are invited, and letters of allotment are issued. On rejection of applications, application money is refunded. In case of partial allotment, excess application money may be adjusted towards subsequent calls. There are several types of issue of debentures. The first type we are going to study is issue of debentures at par. Debentures are said to be issued at par when their issue price is equal to the face value. Debentures are said to be issued at premium when these are issued at a value which is more than their nominal value. For example, a debenture of $100 is issued at $110. This excess amount of $10 is the amount of premium. The premium on the issue of debentures is credited to the securities premium account as per Section 78 of the Companies Act 1956. When debentures are issued at less than their nominal value, they are said to be issued at discount. For example, debenture of rupees 100 each is issued at rupees 90 per debenture. Companies Act 1956 has not laid down any conditions for the issue of debentures at a discount as have been laid down in case of issue of shares at discount. However, there should be provision for issue of such debentures in the Articles of Association of the company. There are some types more in the case of issue of debentures. Issue of debentures for consideration other than cash. Sometimes a company purchases assets from vendors and instead of making payment in cash, issues debentures for consideration thereof. Such issue of debenture is called debentures issued for consideration other than cash. In that case also, the debentures may be issued at par, at a premium, or at a discount. Then entries made in such a situation are similar to those of the shares issued for consideration other than cash. Issue of debenture as collateral security. A collateral security may be defined as a subsidiary or secondary or additional security besides the primary security when a company obtains a loan or overdraft from a bank or any other financial institution. It may pledge or mortgage some assets as a secured loan against the said loan. But the lending institutions may insist on some more assets as collateral security so that the amount of loan can be realized in full with the help of collateral security in case the amount from the sale of principal security should fall short of the loan money. In such a situation, the company may issue its own debentures to the lenders in addition to some other assets already pledged. Such an issue of debenture is known as debentures issued as collateral security. If the company fails to repay the loan along with interest, the sender is free to receive his money from the sale of primary security, and if the realizable value of the primary security falls short to cover the entire amount, the lender has the right to invoke the benefit of collateral security, whereby debentures may either be presented for redemption or sold in the open market. We must also learn that the discount or loss on issue of debentures is a capital loss or a fictitious asset and therefore must be written off during the lifetime of debentures. The amount of discount loss on issue of debentures should normally not be written off in the year of issue itself, since the benefit of the debentures would accrue to the company till their redemption. In case company issues debentures on discount, the total amount of discount is not charged to profit and loss account of the company in the accounting year in which this discount is allowed. The amount of such discount is very heavy, and to the company gets benefit from the loan by issuing debentures over a number of years. Hence, some part of the amount of discount is written off every year. Generally, it is written off prior to the redemption of these debentures. As the amount of discount on issue of debentures is treated as a capital loss, it is shown on the asset side of the balance sheet of the company under the head Miscellaneous Expenditure until and by the amount it is not written off. Premium on issue of debentures. Company may issue debentures with the stipulation that the repayment of the debentures on maturity will be made at premium. The amount of the premium payable is debited to loss on issue of debentures account at the time of issue of debentures. This amount will also be written off in the same manner as is done in case of writing off discount on issue of debentures. The next topic we are going to study is the interest on debentures and redemption of debentures. Debenture is always prefixed by a certain percentage, say 9% debentures or 12% debentures. Have one ever thought what meaning does this prefix carry? It is the rate of interest per annum that will be paid to the debenture holders. Companies generally pay interest on its debentures after every 6 months. Redemption of debentures refers to extinguishing or discharging the liability on account of debentures in accordance with the terms of issue. In other words, redemption of debentures means repayment of the amount of debentures by the company. There are 4 ways by which the debentures can be redeemed. These are payment in lump sum. The company redeems the debentures by paying the whole amount in one lump sum to the debentures holder at the expiry of the agreed time or earlier at the option of the company. In this case, the time of repayment is known in advance and the company can plan its financial resources accordingly. Companies always keep some important points in mind while redemption of debentures that are given by the Companies Act and by SEBI. Provisions of the Companies Amendment Act 2000, Section 117C are: when a company issued debentures after the commencement of this Act, it shall create a debenture redemption reserve for the redemption of such debentures to which adequate amount shall be credited from out of its profit every year until such debentures are redeemed. The amount credited to the debenture redemption reserve shall not be utilized by the company except for the purpose of redemption of debenture. And guidelines by Securities and Exchange Board of India are: every company shall create debenture redemption reserve in case of issue of debenture redeemable after a period of more than 18 months from the date of issue. The creation of debenture redemption reserve is obligatory only for non-convertible debentures and non-convertible portion of partly convertible debentures. A company shall create debenture redemption reserve equivalent to at least 50% of the amount of debenture issue before starting the redemption of debenture. Withdrawal from debenture. Redemption reserve is permissible only after 10% of the debenture liability has already been reduced by the company. There are also some situations given by SEBI where these guidelines will not be followed. A company issuing debentures with a maturity period of not more than 18 months.
Hey, this is Marissa from 37 Signals, and today I'd like to show you another way to pay for your Basecamp account. Some people don't want to have to deal with recurring charges on their credit card, or they prefer to pay for their account in larger chunks rather than be billed every month. Basecamp makes this super easy by offering lump sum payments. You can choose how much you'd like to prepay, and we'll charge your card only once. Every month, we'll take the cost of your account off that balance and let you know when it's running low. Oh, and no worries, you can still change your plan level at any time, and when you do, we'll deduct the new amount from your account balance. From your account page, you can set up a lump sum payment. Click to make a lump sum payment and choose how much you'd like to load onto your account. I have a 10-project plan, so $250 will cover me for an entire year without having to worry about being charged every month. So, if monthly charges don't work for you, then give lump sum.
The other method for redemption is redemption in installment. The debentures are to be redeemed in installments beginning from a particular year. The actual debentures to be redeemed are selected usually by draw of lots, and the redemption to be made either out of profits or out of capital. The third method redemption is redemption by purchase in open market. When a company purchases its own debentures in the open market for the purpose of immediate cancellation, the purchase and cancellation of such debentures are termed as redemption by purchase in the open market. The advantage of such an option is that a company can redeem the debentures at its convenience whenever it has surplus funds. Secondly, the company can purchase them when they are available in market at a discount. The next method for redemption is redemption by conversion. The debenture may be redeemed by converting them into equity shares as per the terms of their issue. The Companies Act prohibits any non-convertible portion of debenture to be redeemed by conversion. This implies that the debenture will be redeemed by conversion only if they were issued as such and no cash outflow will take place, and hence there is no requirement of creating debenture redemption reserve. Whenever debentures are redeemed by conversion, the debenture holders have to apply for the same, and SEBI guidelines require that no company shall issue fully convertible debenture FCDs having a conversion period of more than 36 months unless conversion is made optional with put and call option. If conversion of the debenture takes place at or after 18 months from the date of allotment, but before 36 months, any conversion in part or whole shall be optional at the hands of debenture holders. The premium amount and time of conversion shall be determined and disclosed by the issuer company. The last method we are going to study is the sinking fund method. Sufficient funds are required to redeem debentures at the end of a specified period. To meet this requirement, the company may decide to create a sinking fund and invest adequate amount in marketable securities or bonds of other business entities. Normally, a company ensures that an equal amount is set aside every year to arrange the necessary funds at the time of redemption. This is called sinking fund method, according to while the company makes necessary arrangements, it sets aside a part of divisible profit every year and invests the same outside the business in marketable securities. An appropriate amount is calculated by referring to on sinking fund table depending upon the rate of return on investments and the number of years for which investments are made. The amount thus ascertained is transferred from profits every year to debenture redemption fund, and its investment is termed as debenture redemption fund investment. This investment earns a certain amount of income, call it interest, which is reinvested together with the fixed appropriate amount for the purpose in subsequent years. In last year, the interest earned and the appropriated fixed amount is not invested. In fact, at this stage, the debenture redemption fund investments are encashed and the amount so obtained is used for the redemption of debentures. Any profit or loss made on the encashment of debenture redemption fund investments is also transferred to debenture redemption fund account. The creation of debenture redemption fund account serves the purpose of debenture redemption reserve as required by law and the SEBI guidelines, and is after redemption is transferred to general reserve.
The sinking fund method is a technique for depreciating an asset and bookkeeping records while also generating money to purchase a replacement for the asset when it reaches the end of its useful life. Under the sinking fund method, The business sets aside an amount of money to invest annually so that the principal plus the interest earned in the fund will be enough to replace the asset. The amount of money that needs to be added to the asset replacement fund each year is calculated by determining how much it will cost to replace the asset, how many years the asset is expected to last, and what rate of interest can be earned, as well as how much can be earned through the effects of compound interest. The sinking fund method is not common and is not desirable when interest rates cannot reasonably.
Thus, the steps involved in the working of sinking fund method are: calculate the amount of profit to be set aside annually with the help of sinking fund table. Set aside the amount of profit at the end of each year and credit to debenture redemption fund DRF account. Purchase the investments of the equivalent amount at the end of first year and debit it debenture redemption fund investment DRFI account. Receive interest on investment at the end of each subsequent year. Purchase the investments equivalent to the fixed amount of profit set aside and the interest earned every year except last year, year of redemption. Receive interest on investment for the last year. Set aside the fixed amount of profit for the last year. Encash the investments at the end of the year of redemption. Transfer the profit loss on sale of investments reflected in the balance of debenture redemption fund investment account to debenture redemption fund account. Now, in the end, let us summarize what we have learned in this lecture. A debenture is a unit of loan amount. When a company intends to raise the loan amount from the public, it issues debentures. A person holding debenture or debentures is called a debenture holder. A debenture is a document issued under the seal of the company. Types of debentures are registered debentures, bearer debentures, secured debentures, unsecured debentures, convertible debentures, non-convertible debentures. Types of issue of debentures are debentures issued at par, debentures issued at discount, debentures issued at premium, issuing debentures for something other than cash, debentures issued as a collateral security. The discount loss on issue of debentures is a capital loss or a fictitious asset and therefore must be written off during the lifetime of debentures. Redemption of debentures refers to extinguishing or discharging the liability on account of debentures in accordance with the terms of issue. In other words, redemption of debentures means repayment of the amount of debentures by the company. 4 ways of redemption of debentures are payment in lump sum, redemption by purchase in open market, redemption by conversion, sinking fund method.